Bon dia, and welcome to Move to Portugal Daily, episode 72, May 8th, 2026. I'm Mateus Costa with the Portuguese Pride Network. In the next 10 minutes, I'll give you exactly what you need on turning a holiday rental into D7 income. Let's run the numbers. Picture this, a sunlit studio in the Algarve, white tiles, a small balcony looking toward the sea, and that property paying the monthly income you need to qualify for the D7. I'm going to show you 3 realistic buy and run models for Lisbon, Porto, and the Algarve, with concrete purchase ranges and expected net monthly figures, so you can decide which path fits your budget and timeline. Why this matters now? CEF and the new residency verification mindset favor verifiable Portuguese cash flows over optimistic promises or informal letters. A clean trail of receipts, invoices, and an alojamento local registration is what passes muster. If your income is well documented, you build a stronger residency case and avoid last-minute compliance headaches. Model A, the Algarve Holiday Studio. Target purchase range, €120,000 to €220,000. Think small, well-located units near beaches or town centers that attract steady summer demand. Typical gross nightly rates in this bracket run between €50 and €90. With conservative occupancy of 40 to 60% across the year, you can expect gross monthly revenue in the range of roughly €700 to €2,000, depending on seasonality. After platform fees, cleaning, utilities, and a 25 to 40% vacancy and cost buffer, a realistic documented net monthly income is €600 to €900. That's the figure you'll want to show CEF as steady Portuguese income. Important, register the property as alojamento local before you advertise. CEF will want an AL license, invoices that match platform payouts, and a bank trail. Without the AL, those earnings look informal and can be rejected. Model B, Porto Hybrid Long Term. Target purchase, €150,000 to €300,000. In central or peripheral neighborhoods where young professionals rent, aim for stable long lets at €600 to €1,000 per month per unit. The appeal here is steadier occupancy, fewer turnover costs, and cleaner monthly bank deposits that are easy to document. To satisfy CEF, you need 12 months of consistent receipts. Sample contract language CEF accepts includes clear tenant and landlord names, monthly rent amount, payment method, start and renewal dates, and signatures. Always issue invoices or recibos verdes where appropriate, and make sure platform payouts or bank transfers match those invoices. If you can show a year of steady deposits of €700 to €900 a month after reasonable deductions, that's a solid D7 income line. Model C, Lisbon Commuter Studio. Target purchase, €250,000 to €350,000. Lisbon rents are higher, but so are costs. Use a hybrid short to medium let strategy to reach net monthly income of €1,000 to €1,200 after fees. That typically means mixing short stays at peak rates with reliable medium-term rentals during the shoulder seasons. Tax flags to watch. IMI on a €300,000 property at a 0.5% municipal rate is about €1,500 per year. That needs to be in your operating costs. Also understand VAT versus IRS treatments. Short-stay activity may trigger VAT responsibilities for services, while rental income is typically declared under IRS. If you hold NHR status, some foreign-sourced income enjoys benefits, but rental income derived in Portugal is still declared and taxed per standard rules. Don't assume NHR removes local declarations. Now, 5 action steps to convert a holiday rental into D7-ready income. Step 1. Buy with cash flow modeling. Use net income after fees, cleaning, and a 25 to 40% vacancy buffer. Step 2. Register alojamento local before listing and confirm any municipal restrictions with a local lawyer or agent. Step 3. Set up bookkeeping with a Portuguese accountant and insist on weekly or monthly reconciliation of platform payouts to invoices. Step 4. Issue clear invoices or recibos that match bank receipts. Step 5. Declare the income on IRS and keep records for at least 3 years. Common mistakes and how they cost you. Accepting informal cash without receipts makes that money unusable for D7. Failing to register AIL can trigger fines and invalidate your income history. Overestimating occupancy or ignoring municipal rule limits leads to a property that costs more than it earns. These errors can cost you thousands of euros and months of delay in your residency timeline. Mitigate them by insisting on invoices, checking municipal rules before purchase, and running conservative models.
Listener question. Can I use platform payouts as proof for CEF? Short answer, yes, but only if the payouts match issued invoices and bank transfers. CEF looks for a clear matching trail, invoice to platform payout to bank deposit. If any step is missing, for example, a platform payout that was withdrawn in cash with no invoice, CEF may dismiss it. Practical tip. Export your platform reports, have your accountant issue Portuguese invoices weekly, and keep those bank transfers for your dossier.
Download the episode checklist and a sample rental contract at PortuguesePrideNetwork.com/rental-7 to get the templates I mentioned. If you follow the conservative net income scenarios, Algarve 600 to 900 euros, Porto 700 to 900 euros, Lisbon 1,000 to 1,200 euros, and keep clean invoices and AL registration, you give CEF the verifiable cash flow they want. That's your move for today. If this helped, hit subscribe on YouTube and follow on your favorite podcast app. For more information, visit nomadlifesuccess.com. This is Mateus Costa. Saúde, and I'll see you tomorrow.